Strategies and pitfalls, opportunities and obstacles. The path to financial independence is a delicate dance between risk and reward. In this segment, we'll uncover the tools that can lead to success and the traps that can derail dreams. From high-yield savings to the impact of inflation, we'll provide a comprehensive look at the financial landscape. Watch as we navigate the fine line between prosperity and peril, offering insights that empower and enlighten.
I love that. The fine line between prosperity and peril. I can feel my anxiety shooting up right there.
The drama.
So did you want me to comment, or you have a question, Andy?
How do you, when you're working with your clients, or even as a professional investor, there's so many ways to invest. So like, what is your general view for most people? And then it can be very different if you look individual to individual.
Yeah. So there's some basic tenets of sort of, of investing that I think everybody should understand these sort of basic frameworks. I think where I see people getting derailed is classically not letting the power of compounding happen, trying to time the market. So too much activity, either too much diversification, like in a duplicative way, or too much concentration. I think dollar cost average, like this is the other thing. You have to be like a firefighter. You have to be willing to run into the fire, right? So when the world looks like it's going to pieces and the market's falling to pieces, like that's the time when you're gradually deploying capital. You're going to be so much better off. But we're social animals, right? When everyone is losing their heads around us, it's very hard for us to go, you know what? I'm just going to keep putting, the $500 a month I put away in the market I'm just going to keep doing that, right? But it's I think Morgan Housel calls it, or Napoleon called it, like the doing the ordinary thing when everybody during extraordinary times, kind of a thing. So I think there's some basic things like that. I think where people go wrong often is not trying to make it more complicated, trying to beat the system, having a little bit of a lotto mentality. This would be like meme stocks, trying to get rich quick kind of a thing. And I think for a lot of, and I'm going to speak to sort of, the sort of middle of the, just your average retail investor, like whose hands you entrust your money in matters a lot. And I personally, I get scandalized at some of the stuff I see. I mean, I'm like, can people look at themselves in the mirror and do this to their clients? But they do. So learning how to discern who's safe hands or not. And also, really low cost, efficient indexing, ETFs. I have no problem with target date funds. I think for the average person, do it, put it in there, dollar cost average, and also have different different kind of sort of cisterns of money. If there's a sort of mattress money that you're never going to look at, that you can invest in really aggressively depending on your long-term horizon. Things where you can also save, but not with a specific purpose necessarily, and you can let that compound. And I think you can also have fun. If you're somebody who really enjoys trading, or you really enjoy doing whatever, take a small amount of your capital and go to town, because you'll scratch that itch, you'll have all the fun. But meanwhile, the rest of it's politely compounding, and you're keeping your mitts off of it, and so I highly recommend Morgan Housel's book, The Psychology of Money. I think that that's something that everybody should read, and at least you'll understand how not to be your own worst enemy, I think.
That's great advice. And I've seen similar things that you're talking about. In fact, just this weekend, a very close friend was texting me and asking, what's a good website to look up the fees of different mutual funds? Because he has a friend that has an account with a company, and he said the ticker symbols were so long that he just suspected that they're these proprietary products with very high fees. And I told him, go to Morningstar. You can plug it in, you can see the fees. Otherwise, just send me a list and I can generate something for him. But yeah, there are still crazy things going on out there, even though we've seen fees coming down a lot, which is good for everybody. We see 0% commissions, we see low cost ETFs and index funds. There are many, many ways to invest very inexpensively. And you could just be investing like $5 a month when you start, and it's okay.
Yeah, that's the thing, is to get the habit. I think it's very important to get a habit, get the plumbing, so the cash flows, and so you're not having to make cognitive decisions. You're not having to make decisions. It's automatic, and then you're not, when the markets are bad, you're not sitting there going, should I not? You're just having this flow going in for long-term money. Obviously, if you're going to working on the deposit for a house in the next 2 years, that's a different story. But I also want to tell you one thing I do kind of for fun, which is sort of twisted of me, but I do go to these free retirement dinners and seminars, where oh no, we're trying to educate you about retirement, but really we're like closet trying to sell you variable annuities or annuities. And really, because I know where the line of the law is, right? And they are walking that line very fine. But man, the psychological manipulation, the fear mongering. I mean, of course, everyone's going to go screaming out of that room, and into the arms of an annuity salesman. And it just makes me nuts, because these, it just really, like, it's just not okay. But people get away with it. And so this is where I think, even if you think capitalism's stupid, if you think money is like shallow, there's a basic level of education that I think, the same way there's a basic level of education about your health, right? Just out of your own self-worth and self-respect, just try to learn that. There are so many ways to learn it, in ways that are not awful and jargon filled. And it's worth doing that, because you got to calibrate your bullshit meter.
Doc G, you have an audience of people who want to retire early. They want financial independence. What common challenges do you see that are recurring? And what do people need to be mindful of?
Yeah, I mean, I think we need to actually de-escalate the conversation a little bit. And I take a lot of this from Nick Majuli, who wrote a wonderful book called Just Keep Buying. And his website is Of Dollars and Data. So there are a few things to know. I mean, most investments actually go up over time, right? So if you are a long-term investment, and especially if you're at all diversified, most likely your portfolio is going to rise. The other thing is, if you keep buying in high markets, low markets, flat markets, if you just continuously keep buying all the time, you are going to accumulate a lot of wealth. So as long as you don't have anything sucking the value out of your investments, and that's where we get to what you guys were just talking about, like, for instance, high fees or high advisor fees, etc. Once you get past that, the grand majority of people who have a portfolio, right? Someone who actually has a portfolio of investments, who listens to podcasts like this, or who is thinking about these things or reading any of these books, the grand majority of those people are going to die with more money than they need. Running out of money is very unlikely for people who actually pay attention to their portfolio and who continuously invest over long periods of time. So the truth is, I'd like to turn the conversation around. The pitfall is worrying about being perfect when all you really need to be is good, or even just average. Like, if we can just get people to buy reasonable investments with low fees over long periods of time, we are going to have so many millionaires and multimillionaires, we're not going to know what to do with them. Human nature will not allow that to happen. But the first thing that we often talk about in my audience is, look, dude, you don't need to be perfect. You've got to be consistent and reasonable, and let time and compounding do the rest. The stock market is a fantastic, amazing thing. Most stock markets, even around the world, go up over long periods of time. So if you have a trajectory, if you have the time period, you're almost assured to win if you can get the behavior down correctly.
A
Dr.
1,000%.
is a living example. She achieved it. I mean, you accumulated $1 million at a relatively young age. Did you keep things simple?
Very simple. At one point, I did step out there. I got a little too cocky. And I was actually having an interview today, and the reporter, I was telling them one of my mistakes was getting on this train. There was a tech ETF, and I was like, oh, yeah, I should just, put some money there. And I lost big time. I mean, over half the value of what I had invested gone and never came back. I mean, I went to look when I sold in early 2022, and I mean, here we are at the end of 2023, and it's less than what it was when I sold. So I think even though I am a numbers person, I have a PhD in analytics, but I learned my personality is to stick with simple, and index funds has a history. And I think for the average person just starting out, or even not, if you're busy being a doctor, saving lives or delivering babies or, being an accountant, whatever it is that you do, we know that the stock market, the S&P 500, the Dow Jones, it has a history. The NASDAQ, it has a history. And no, history does not predict the future, but we can use some of that to help us versus some new cutting edge tech ETF or fund or whatever, that sounds so beautiful and it's going to make me a gazillionaire, and then it doesn't happen and you're like, So yes, I definitely believe, for me anyway, and for I think a lot of people, they want simple. They want something they can understand. They understand Coca-Cola is sold on the stock market. They know that. And we understand companies we know and love, we can easily track. Caterpillar, how did Caterpillar do this quarter? And that's in the Dow Jones. And so just breaking it down into every day, where are you shopping and what are you buying and what do you believe in and what companies, and there's a simple recipe to that. As my colleagues here on the line have said, it's consistency. It's putting some money in early, or if you're starting a little bit later, if you feel like you're starting late, which a lot of people are, if they are starting later, then you just find those ways, as we said before, to cut in some areas so that you can have more to invest. Because if you're starting later and you can invest more than that standard 10 or 15, or even if some are saying 20% now, if you can invest more than that, then yes, your money's going to compound and grow faster, right? Oh, because you need time. So if you have less time, then you have to put more money in, but you can do it. You've done other things that were hard. You've done other things that were challenging, right? And I always tell people that you've done something that was hard. You've done something that pushed you, that stretched you, and you can do this too. And trust me, it is worth it. It is worth the investment. It is worth the time. It is worth any little sacrifice that you may make so that you can enjoy and reap the benefits of it later.
Well, that's the perfect segue into our final segment.